Hey everybody, thank you for tuning in to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. Today, we're going to look at the ticker symbol RVP, Retractable Technologies, and why you should rewatch this video after the stock goes back over $20. Yes, the stock will get back over $20 eventually, but I do want to preface that by saying the stock price will also get back below 190 based off technical analysis and kind of looking into the future just a little bit. So without further ado, we're going to take a look at some numbers. We'll look at some charts. We'll talk through some other information that could lead us to believe why we would see another run up and when we could ideally invest and add the stock over the long term. Let's jump into it. All right, so the first thing we're going to look at is actually subscribing to my YouTube channel. This is going to let YouTube know that I'm creating content that might be valuable to some people, specifically those who are interested in investing. Also, if you could throw down a like, that would help as well. But we're looking at finviz.com. I would recommend you do this on a laptop, but we're looking at RVP, the ticker symbol RVP. This is Retractable Technologies. As we can see, the chart we are seeing, you guys can see my screen, okay, just want to confirm, is kind of a megaphone. We have some support down here, resistance, 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 and now we've hit support at the bottom of the megaphone. But you can see it's kind of sloppy right here. It's fallen through. So I don't believe this is a true megaphone pattern. It's just kind of what the Finviz algorithm drummed up for us. But let's go down and look at some numbers really quick. So what we want to determine right now is, okay, what are the sales looking like? We do know that the sales for RVP are going to be a little unrealistic based off of the health crisis over the last couple of years. So this is not expected to last. So we just want to keep that in mind. We want to look at the sales data as it is today. We want to look at the amount of shares available, amount of shares outstanding. We'll look at debt and see if insiders are buying or selling. And yeah, any other relevant information like gross margins and whatnot. So scrolling down, let's just whip up the calculator right here. All right, so we can see that there is 154 million in sales right here. That sounds good. It looks like our debt is really low. That is great. Our quick ratio is high, meaning there is a bit of cash, which is always great. What else we got? Get out of here. Get out of here. Come on. What's this crap? Sorry about that. PE is good. We don't really, the PE is based off of earnings per share and shares available, sales and things like that. But it's, again, it's based off of this set of data, which is not going to be 100% true going forward. But let me preface that with earnings past 5 years is at 66%. The health crisis only lasted a few years, so there's something going on there. Sales over the past 5 years, 44%. That's also good. Gross margin is 43%. That's insane. That's insane growth, in my opinion. That's like for a good growth stock. Insider transactions are at 187%. Insiders only own 1% of shares outstanding. Institutions own about 20%. Shares, there's 32, almost 33 million shares of it, or shares outstanding, but there's only 14.9 million available. So what that means is the lower the amount of shares available, the more volatility we can expect to see. Just throwing that out there. So there is 154 million in sales. So we're just going to add 154.9. And let's also add in the cash that this company is sitting on. I don't think it's too much, but let's just see. 29 million. Okay, so we're going to plus 29 million. 0.16. All right. So that leaves us with 184 coming in, cash plus sales. And then we're going to look at, okay, if I owned this company with some people and there was 33 million shares available, 33 million shares outstanding, only 14 million available. Let's look at what our range is going to be. We're going to have the conservative range, which is going to be the shares outstanding number. So that's going to be, you guys can't see my hands. That's going to be the 32. We're going to do the 184 divided by 32.9. That's going to be our low range. And then we're going to do 184 divided by 14.96. So that's going to kind of be our range that we're looking for. So 184.06 divided by 32.95. So a lower end price target of around $5 if this company were based off of conservative values. Again, we know that sales are going to be lacking. Orders are going to be lacking. That's okay. They've reduced their workforce as of June 6th, but we'll look at the website and look at job openings. So the low end price target here is $5.58. And now we're going to do the 184.06 divided by 14.96. So 550 to about 1230 is kind of the threshold where I would really be interested in wanting to add and then sell at the upper end. I feel like my numbers are not that off. Based off this data, I know this data, I still just need to reiterate, this company that we're looking at today is going to be different than the company we're going to see next quarter and the quarter after, based off of sales, and then year after that as well. And it's a price earnings right now of 2.7, which is really undervalued. But again, we can see what's happening. This is this boost in from the company or in the company was based off the health crisis. So given what we have here, 550 to 1230 sounds good. Okay, let's look at a couple charts. So I'm going to switch the screen now over to Thinkorswim. Okay, so I've got a few different charts to show you guys. So what we can see here, this is a good view to start out at. What we can see here, this red triangle, we can see this is a bullish move. And oftentimes the stock will break before it reaches the end of this triangle. So typically it'll break. It normally breaks around this point over here and then floats up and then comes back down. Okay. Cool. What does that have to do with what's going on? The price has already broken much further back than we would expect this triangle chart. I'm getting my words mixed up. This chart pattern to have a breakout. So it'll break out and then it comes back down into the triangle. And this next move up is going to be the stronger move and more sustaining move. And what we're going to need to see here is, sorry, my head keeps floating out. We're going to need to see a lot of consistent demand from the company, consistent sales. We're going to need to see some hiring. So, yeah, they did announce that they cut their workforce. So we'll look at that. And we're just going to see a better, more solid company going forward. We can see based off this chart here, I think the stock price is going to get potentially as low as $1.21. Don't hate me for it. Maybe 65 cents if it goes back down to older lows, which I highly doubt based off what the company is doing. I don't think it'll get back under $1, but I think if you believe in this company long term, you can start adding this, I think, safely under 190, not financial advice. And I say 190 because it's one of the ranges, like right here. It's where the last support was built. So if you're going to buy into this company and you want to ride it into the $20 ranges, It's going to be a long-term accumulation type of situation here. So essentially, I think we could see this getting back to the 20s by 2027, 2028. You might be thinking that's a long time, but if you are trying to add over the long term and you think the company is going to be around, why not? That's how wealth is made. Um, but kind of the dangerous flip side, devil's advocate, is you never want to try and predict where a company will go. So we are looking at fundamentals, we're looking at technicals, the chart. The pattern that we're in is a bullish pattern that had its big move already. So if you are holding a bag at 15, 20, 10, whatever dollars, um, continue to watch the company. I think it's going to be a safer bet long term. We're going to see more prices on the downside, in my opinion, not financial advice. Um, but I think slowly adding for the next couple of years is going to be a potential wonderful opportunity. So, going back to my chart. So, as we can also see here, we had an ascending wedge, this blue um, ascending wedge here. We have the upper trend, we have the lower, and this bottom part is support. This upper one is resistance. So it broke out of this ascending wedge and it fell. And that's for a few reasons. In my opinion, basically, this company was a momentum move into the health crisis because their products directly correlate with what was happening. And it could not sustain. The market said this company cannot sustain or does not is not worth being valued around $20, $13 to $20 basically. And I understand because I don't think the company is big enough or has the customer base to be at those levels yet. Um, so what we're going to want to see is potential reoccurring orders, government contracts, a lot of sales growth, marketing growth. We're going to want to see that. And as of June 6th, they laid off a bunch of people, apparently, allegedly. So, again, this is one chart pattern. Let me show you my other chart pattern that I have. All right, this one is really messy. So let me just kind of explain it to you guys here. Sorry, I need to set this. Okay, so this green, um, I guess, cycle is basically every spike that has ever happened with RVP. So if history repeats itself, which it often almost sometimes does, we could see the next spike in 2040. And it could be as high as 2779. And I'll just let you look at this for a minute. My head's in the way. I'm sorry. Okay. So, as I was saying, the next spike, every green trough is a spike in the price, um, a multi-decade spike. So, the next spike we have coming over here, it looks like October 2040. That's if the company continue to be relevant, contracts, growth, etc. They've had good sales over the last 5 years, earnings per share over the past 5 years. Gross margins over the past 5 years are 40%, or I'm sorry, gross margins year over year, 40%, sorry. So there is that. We also have these troughs of these red ones right here, 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 here. So this is a buy trough. This is a sell trough. This is a buy trough. So we want to buy big. It's saying around 2032, 10 years from now. It's saying buy. And then sell over here. And this is showing 2044. So, yeah, that's what we're seeing here. Another thing that I'm also seeing that I guess we can do real time. This is really long video, I'm sorry. But I'm seeing a big cup and handle. So we have the left cup over here, right cup, and then the handles being built over here. The low, it cannot break the low of 43. So I think if this gets to 65 cents, this is going to be a steal of a deal. I don't think it's, I think this is worth a lot more than 65 cents, but there's a lot more manipulating the stock price than what it seems. And also the current health crisis is subsiding. So it's not out of the realm of possibilities that this could go back to 65 cents. We've seen crazier things in the market, haven't we? Didn't we see oil go negative at one point before it then went to $100? Um, so really quickly, let's just look at this cup and handle calculation here. I'm just going to open Paint. Um, let's see. We'll do this together. All right, I just did that. I don't know if everything froze, but let's just go in here. Let's do a Control V. You guys can see my screen. And we're going to make this white. So we have the left cup to the right cup. And let's go in like that. All right. And the handle's being built as such. Let's give it a mill. Like so. There's the handle. All right. So we have, is this text big enough? Yes. So left cup is 9. Gosh, I'm sorry. It's around 906. 906. And then the top of the cup is 25. Our cup equals 20 or 21.5. My bubble, I'm heading out of my bubble. 21.5. Okay, and then bottom is 43 cents. That's the absolute low. So we're going to take the average of 906 plus 21.5 divided by 2. So 15.28 is the average cup height. And so what we're going to do is the cup height minus the low. So 1528 minus 0.43 is 1485. And we're going to add the 1485 to the 15.28. So this is going to be a price target of $30.13 for a cup and handle breakout if it does happen. This would be a absolute low of, it can't go lower than 43 cents. We do see some support around 65 cents. So it can't go lower than 43 cents. So potential high of $30, that sounds fine and dandy. And I mean, the company, we're back to Finviz here. The company's been pretty consistent past 5 years. So I feel like this company is a company that we can kind of feel okay in, honestly. They have a good quick ratio, meaning they have a lot of cash. If they were to go bust tomorrow or close doors, they would be okay with their assets, liabilities, debts. So gross margin. Okay. So let's look at a couple things here. So Retractable Technologies announces reduction in workforce. Let's look at that, and also let's look at the company's website. I just want to see the jobs. It's always good to see the jobs. All right, so let's look at this article. Okay, so RVP reports that it's reduced its workforce by 16%. As a result of substantial completion of its facility expansion efforts and the completion of U.S. government orders to provide its products for COVID vaccines. So basically, I mean, I thought this was a lot worse than it is. It just sounds like they had staff, like project managers, building up this facility that they no longer needed. So and it's only 16% of their workforce. And if we look at Finviz, it looks like there is 233 employees. I mean, that's going to be less than 40 people. I mean, let's just see. 233 times 0.16. About 38 people were let go out of 233. So there's that. Not as bad as I thought. I thought it was a lot, lot worse than that. So let's look at their jobs. Their website is SSI secured, so that is good. That means this company is serious about internet security for their website. A lot of cheap penny stocks don't have that, or they didn't back in the day. Okay, so let's see how we can see careers. Where are your careers at? Resource Center? Articles, products. I'm not seeing any careers here. Contact us. Let's see. Okay, I'm not really, yeah. Okay, so it looks like they, let's see, careers. Okay, so they do have a careers page. They have no job openings at this time. So they do have a page for careers. It's just they have nothing. So they have it omitted from their website. So that's fine. But let's do a little bit deeper digging. So retractable technologies. Retractable technologies, jobs, careers. Okay, so as we can see, there's jobs open. Ain't that something? So these this I've seen this before where biotech companies will not have certain jobs on websites, and if like this one, it looks like it's literally all territory manager jobs. This is much different than the building of um, their location. So yeah, it looks like they're hiring territory manager sales kind of everywhere. We have Tennessee, Nebraska, Kansas, Texas, Oregon, Michigan, Tennessee, Minnesota, Massachusetts, Texas, Connecticut, Minnesota, Michigan, Texas, Colorado, Seattle, Washington, Massachusetts, Oregon, Nevada. Go Nevada. I am in Nevada, Las Vegas. So this is amazing. This is what we want to see. We want to see a lot of sales openings, a lot of marketing. They don't have the marketing, but they have sales. So this is good. Um, I have a job, but otherwise maybe I'd be interested in this. I don't know. So they have a good sales force picking up here soon. We're kind of out of a health crisis, so this is, I think, the the implementation of these jobs is going to lead to higher stock growth in the future. We have insiders buying. Let's just look at those again. Sorry, I'm scrolling too fast. Okay, so we have this guy, Leonard Braden Michael. It looks like he's the only insider that's buying, and he looks like he is a 10% owner. I don't think he actually works for the company, or else he would be like director or EVP, or it would say something. So insiders are buying with a little asterisk, and it's someone from the outside of the company. Institutions are doing a little bit of selling, 0.02. Let's just see here really quick. Fintel And we're going to look RVP. Okay, so we should see, let's see if I can get it right. We should see we should see at least around 70 million in institutional value dollar wise. Oh, a lot less. 15 million. That's a lot less. That's a lot of selling in my opinion. So a lot of selling here. Oh, it just updated. Let me. All right, slowly going. Okay. So, that's a good size. Oh God. Oh God. Okay. Okay, so we have BML Investment Partners. It looks like they added to their position as of May of 2022. So we have Stone Asset reducing. We have Ritholtz Wealth Management completely liquidating. Beacon Capital looks like they liquidated. But we also have DFAT adding. We have Vanguard adding as well. Quite a bit of additions. Global Russell 2000 sold out completely. So it looks like they sold out of their position. So they're no longer in the Russell 2000. So yeah, a lot of trimming here if you look at the negatives. This company completely sold out. Legal in general is gone. So it's a mix, and we are, we can see, let's go to the top. There was a ton of value here December into going into January when the price spiked to 21. And as we can see, it's just slowly drifting. This is the share price over here. Here's the shares, and we can see it's just going down. So ownership, the bars are the ownership, and we can see the further it goes down, the less people want to own it. I would understand that. So, yeah, 15 million, a lot less than I would have anticipated. Again, this goes into my theory that we're going to go down to 190, potentially 65 cents. But I think over the coming years, months maybe, this is going to be something to add long term. I do think we'll see 20s, and I think we'll see the $30 again. So yeah, when the price has eclipsed this, come back to this video and see all of the reasons why I thought it was going to do so. If you're enjoying this content, please consider subscribing to my YouTube channel. Drop a like, and I'll see you guys next time. Take care. Bye.